Hi, good afternoon, everyone. This is Elkie with you guys today. Welcome to our monthly traders talk. All right, okay. Before we start the session today, just would like to do a very quick mic check. If you guys can hear, whoever that with here today, just drop a hi or yes, yep. Okay. Meanwhile, let me try to put on the screen for today. Okay, let me share my screen. Okay. All right. Okay. All right. So, okay. Yep. Okay. So, welcome to our September Traders Talk today. Okay. I'm your presenter for today. My name is Elki. All right. Okay. So, you can see from our cover page today, you can basically see that what we're gonna focus today, it will be very much a lot on the um longly anticipated Fed rate cuts. Okay, but of course we're gonna go through review of some of the thing that we're gonna experience in August, and then only we go into how the monetary policy it gonna affects us. It's gonna shape the outlook, and lastly, we're gonna look a little bit on potential sectors or potential opportunities that might arise from budget 2026. And of course, last but not least will be our as usual our seasonality for the month of September. Yeah. Okay. Yep. So welcome to our section today. Okay, I'm your speaker for today. My name is Elki, and this some information about myself. If you guys have hasn't known me much, okay. So I've been in this industry since 2012, and then I've been involving in futures in stock equities. I was once a prop trader, so with all this experience, all these things that I learned, knowledge, all this. So I'm putting up, combining all this to share with you guys, and hopefully, with our monthly trader stocks, on every Monday for the first Monday of the month, it can help you guys to have a better understanding and also shed and put up some insights on what are the play for the month. All right, okay, yeah. So again, welcome to our monthly trader stocks today. So let's start with the review for the month of August. Okay, so if we look into the month of August for any of you guys that have been actively traded, yeah, I would say that the month of August is actually quite exciting, especially if any one of you that have been trading more on bigger cap, okay, larger cap, okay, on some of the blue chips. We can see the FBM TLC actually has added more than 4% in the month of August. Okay, yeah, so among all the sectors that we are seeing, okay, we can see that constructions, the banks under the financial services, and also technology are those that really performing. Okay, yeah. So one of the reason why all these sectors they have been the one that performing the most. One of the reason is September is usually is the dividend season, the dividend month for all these banks. Okay, and also these are some of the sectors that have been posting stronger results for for last month. Okay, yeah, banks their results are pretty much in line. Constructions, technologies, utilities they have been posted strong results, and plantations have been benefiting from improving pump price, CPO price from the first quarter. So these sectors, all these sectors, they have been moving up strongly in August in anticipation of a better earnings. Okay, yeah. So in contrast, we can see that healthcare has been the worst performer. Okay, it has been the laggard among all the sectors, whereby they are still suffering from mainly will be glove. Okay, still suffering from uh uh a lower profit margin. Okay, their ASP is not improving. Okay, they are still having a very stiff competition in the industry. Okay, so I would say that for the month of August, it's really driven by the earnings, the performance. Okay, so if we compare to our seasonality charts that we shared during our monthly traders out in August, okay, we can see utilities were pretty much in line, whereby it was performing. Okay, but we can see that generally overall in the month of August, we were actually being more conservative. Okay, as we were preparing for a seasonal retracements in the month of August and actually September. Okay, so I will be sharing more on the seasonality during our last session of today. Today sharing. Okay, so you will be able to see why we have been more conservative in the month of August. Okay, so this year has been really different because um, due to a weaker results in first quarter of the year. Okay, um, the results posted in the August in last month actually appears to be stronger and also improving. Okay, especially after we have a better clarity on tariff, we are getting a better tariff numbers, and also we had governments announce stimulus measures, and we also had central banks announce the bank negara announce OPR cuts, and of course the topics that I've been helping, which is a stronger ringgit, especially the spike in the month of April. Actually, all this materialized in the August earnings. Okay, so all these things has came in and factored in and actually boosted the result for the month of August. Okay, yeah, so we can see that all these domestically oriented sectors, they have been outperforming the rest, while some export related one like healthcare, like glove, like furnitures, they are remain underperforming. Okay, yeah. Okay, so if you are subscribing to the H Weekly, the H Weekly, you can see the earnings summary for the top 50 companies by market cap in the H Weekly this week. Okay, we can see most of them, they are in line, and those that outperforming, they are above the consensus estimates is actually much more. Okay, yeah, so with all these better results, it actually boosted August to be a better month compared to better than the average seasonality performance. Okay, for this year. All right, so if we look into some of this index, okay, like constructions, technology, and also financial services, are they still having upsides? Okay, yeah, so if we look into we start with Bursa Construction Index. Okay, if we look into construction sites, construction sectors wise, technically we are seeing that construction index, it is moving into 2020, 2007, 2008, and also 2017 and 2018 high area. Okay, so this area right over here is between 315 to 345. These are the area that has been the key resistance for 2007, 08, and 2027 and 2018. Okay, it was the major resistance, and right now we are seeing the construction index moving into it. Okay, in line with that, we are also seeing that MACD is suggesting a bearish divergence. Okay, whereby the buying momentum has been slowing down. So for those who has been buying into construction stocks last month, or you have been trading actively, you might want to be really careful and also be aware that there might be some profit taking coming into construction index, construction stocks in this month. Okay, in this month also. Okay, we can see that in August and also early last year December, as it entered the resistance level, it had quite a sharp drop. Okay, right over here we are yet to see any sharp reversal, but do monitor it closely. If we are seeing a sharp selling below 20 days moving average, like what happened over here in August 2014, and also in early this year in January, okay, then you might really want to reduce or even exit some of your construction stocks positioned. Okay, yeah. How about the technology index? Okay, if we look into technology index wise, we are seeing technology index, despite that it has been selling down and trading on downtrend since second half 2024. Okay, we are seeing there are some recovery. Okay, there are more recovery and back to test the 200 moving average area. Okay, but no doubt 56 level is a key resistance for technology index. All right, whereby we might see some consolidations. Okay, back testing 51 level and the breakouts for upward continuations towards 65 levels. Okay, so for those who are trading on technology index, you can still hold on to your position if you do not have a very strong position. Okay, otherwise you might want to be a little bit more conservative. Okay, and see if there are any bargain hunting opportunities if we are seeing technology index back to 51 uh, 51 index point level. Okay, for those technology stocks that have been undervalued and has been underperforming, okay, you might want to continue keep them. Okay, yeah, right. Okay, as for the finance index, okay, if we look at Bursa Malaysia Finance Index, we can see that since September last year, it has been trading on a downtrend. Okay, it has been trading on a downtrend, and in the month of August, we actually had quite a sharp rebound. Okay, ahead of the usual dividend months for all the banks. Okay, yeah, so we can see that it has rebounded from the multiple tested 17,250 levels towards it rebounded about like 1,000 points from the low. Okay, and it actually coming to the potential trend line resistance. Okay, so we can see that from this high we have been running down the trend line, and we have multiple trend line as a potential resistance over here. Okay, yeah, but of course we one thing that we can see is previously in this year, early February, it has a breakout from the trend lines. Okay, and false break returning back into trend lines remain resistance. Okay, so at this case for Bursa Malaysia, for this round in September, if it again tested this trend line and then forming a sharp rejection, okay, a sharp bearish reversal, we might see similar movement right over here that we have been observed in the month of March. Okay, yeah, so you might want to be careful. Okay, otherwise, if we able to hold on above 20 days moving average or above the trend line, then we do not rule out the possibility that it might be turning uptrends. Okay, but for the major breakouts, for a confirmation of an uptrend, is at least it need to trade above 500s. Okay, 18,500, which is this area of 18,500 to 18,600 area. Okay, otherwise this area right over here, it could be a very solid resistance that we really want to watch out. Okay, yeah, so if we are seeing banks having sharp rejections or forming into a very bearish reversal signal on the Bursa Finance Index, then we might want to be really careful on the change in the sentiment, whereby the sentiment could be turning from August extremely bullish to extremely weak kind of situations. Okay, yeah. So out of the three sectors that have been performing in the month of August, I would say that I will be really careful on the construction index. Meanwhile, I'm still holding quite a positive view on technology, and also I would really want to monitor very closely for the finance index. Okay, yeah, especially multiple banks gonna have ex dividends this week or even next week. Okay, so how about the overview of the overall index and also the commodities? Okay, if you look into our local blue chips index, okay, the the 30 stocks index wise, we can see that in the month of August, we had the strong surge in the month of August had actually led the index to break out above the downtrend lines. Okay, that started to form since August last year. Okay, however, with these breakouts, we are still seeing that MACD is forming a bearish divergence. Okay, whereby the breakout for this in the month of August, it could be short-lived. Okay, if we are unable to see it to hold above 15 15 4 15 50 1540 to 1550 levels. Okay, it need to hold above 1540 to 1550 levels, some consolidations before the further breakouts to trades above the 1600 levels. All right. Okay, at the moment, at this point, we are seeing with the recent sharp selling from 1600 levels, the index should have some weakness to be seen, and it might trade back to 1540 to 1550 levels. And if you're able to hold over there, okay, and rebounds, we can say that this could be a break of the trend lines, and the trend line might be no longer valid, and it might form into a upward trending instead. Okay, and retesting 1600 or even trade above 1600 levels. Okay, so what the market's actually also looking at is some of the analysts has been talking about all the risks, all these bearish factors, bearish reasonings, they have been factored in the first half of 2025, and the second half of this year it should be better. Okay, that's why with stronger earnings seen in the month of August, with corporate earnings remain solid, there are also expectation that our index could retest 1600 or even trade above 1600 levels towards 1640 or even 1680 for the end of 2025. Okay, so do not being too biased on the index directions. Okay, at this point we are seeing the breakout from the trend line, and if it, like I said, if it able to hold above 1540 to 1560 levels for the next 1 month, okay, whereby we will revisit in the October monthly trader style. If the things are more positive right over there, then we might want to position look into some opportunity and position for the year-end rally. All right, okay, but at this moment the weakness is it seems to be stronger. Okay, and we might want to be more careful for the month of September. Okay, as for small cap, we can see that small cap index, it has been trying to trade above, but we are seeing that the movement has been really small, and it has been stalling as the small cap index is approaching near the 200 moving average resistance. Okay, so for small cap index, we are not expecting a major trend forming at this point, and we might see a further consolidation sideway movement. All right. Okay. So for our Malaysia, one of the major commodities, CPO. Okay, CPO wise, we are seeing the recovery in CPO prices since May. Okay, we are seeing the recovery in the CPO prices in May, and it has been trending higher towards to retest the 4600 area. Okay, and in August it has some retracements. Okay, yeah, with some buying supports at 200 days moving average. Okay, we might see it to try to move in more towards sideway. Okay, with some further downsides towards 4350 levels. Okay, there's still some downsides right over there at 4350 levels as the increasing production numbers. Okay, but yet the stronger demands on CPO actually offset that seasonal high production figures on CPO this year. Okay, yeah, due to, I would say that it could be due to the tariff, and also US is the China is not placing new orders on the US soybeans. Okay, so CPO, crude palm oil as a substitute, vegetable oils, it actually gains some demands from there. Okay, yeah. So with the supports right over there, we are still seeing that CPO prices remain supported above 4,300 levels, and if it able to stay supported at this area and rebound, we will expect it to retest the 4,600 levels or even break out higher if the seasonal buying kick in later. Okay, yeah. So if that happened, that should land some support and also land some and create some buying interest into some plantation stocks later when it comes to the end of the year. Okay. As of crude oil, okay, we are seeing crude oil remains weak. Okay, the price remain below 200 moving average. Is still pressuring below 20 days moving average. MACD is still pointing downwards below the zero levels. Overall, that is a little bit more bearish on the crude oil. Hence, we are not seeing energy stocks to be performing as well. Okay, and adding to that, the Petronas Petros disputes remains hanging, and that actually clouded the sentiments of the energy stocks and puts everything on hold for energy sectors. Okay, so I would say that energy stocks, you might don't want to touch at the moment until things are clearer. Okay, on Petronas and Petros dispute. All right. Okay. So in summary, we would say that the blue chips could stand a chance of trading higher. Okay, if it able to hold above the key support levels. Okay. Meanwhile, small cap might still continue to trade sideways. Yeah. And also a more bullish and positive outlook on the CPO compared to the crude oil. Okay. Yeah. So how about the monetary policy that everyone has been discussing and talking about, and how it gonna affect our outlook for the month of September? Okay, I believe many of you guys do aware that during our August money trader stock, we have been highlighted on the Jackson Hole symposium. Okay, as one of the key events, whereby it was an event where Federal Reserve chairman, they love to use it to disclose and also share their directions for the year. Okay, so in this year, Jackson Hole symposium actually, Powell actually came out and put up this impactful statement, whereby it actually hinted that a rate cut would be coming. Okay, yeah, he actually hinted the rate cut would be coming, and that actually increased the market confidence and also shape the market is moving towards and getting prepared for a rate cut in the month of September, which is next week. Okay, yeah. All right. Moreover, after Friday non-farm payroll date figures, it seems like the rate cuts, it will be quite certain at this point, and rather instead of talking about if there will be a rate cut or not, the market is focusing on whether for the September rate cut, is it gonna be 25 basis point or even lifted to 50 basis points. Okay, so the question right now is no longer whether there is any rate cut or not, but it's more towards is it going to be 25 or is it going to be 50? Okay, so regardless, it's going to be 25 or it's going to be 50. Okay, a rate cut, it actually will be benefiting, it would be slightly benefiting us, and it also the benefits the whole global economy. Okay, yeah, because I would say that the market really need it at this point. Okay, yeah. Especially for Malaysia, okay, we can see that in 2024, we have been trending upwards. We have been going into an uptrend, okay, until August, whereby markets started to be looking into a potential pause in the rate cuts, okay, and things are quite firm up. Powell has been hinted, stated that the rate cut gonna take a pause with the Trump policies, tariff, all this going on, and we can see that how our local benchmark index has been performing. Okay, and also we can see that from the fund flow charts, since the foreign fund flow has been decreasing. Okay, instead of inflow, it has been outflow. We can see that how our blue chips index also has been reacted. Okay, yeah. So for this year, up to date, we actually can see that our outflow has been more than $3,800 million dollars. Okay, compared to last year cumulative, we only have less than 1,000 million outflow. Okay, so this year we are really seeing there's a lot of outflow as the post in the interest rate cuts. Okay, money has been staying in US, and it's not, we are not seeing the inflow. Okay, yeah. So with the rate cuts that been widely anticipated, it would lead to a weaker US dollar and also a cheaper borrowings for the funds in US. Okay, yeah, and also with a weaker dollar, we are likely to experience a stronger ringgit as well, and that would be helping to bring, likely to bring foreign inflow into our markets, okay, into emerging markets, into our markets. And ringgit has been one of the stronger performing currency in Southeast Asia. Okay, so if there is additional funds resulting from these cheaper borrowings coming into Southeast Asia, okay, ringgit or Malaysia should be one of their top priority destination that they will consider, especially after Trump has been announced that our tariff rate is actually 90% and is considered one of the better ones. Okay, yeah. So Malaysia should be a good destination for all these foreign funds to come in. All right. Okay. So with the rate cut, it would actually help us to put up a stop on foreign outflow, or even we might see inflow and the reverse of the outflow process. And with that, hopefully, we will see a better performance in our Bursa stocks, especially those blue chips, those stronger fundamental ones. Okay, yeah. So meanwhile, on the other hand, we are also seeing that Bank Negara Malaysia last week, they have maintained the OPR rate at 2.75%. They are not doing another cut after they just had one in May. Okay, yeah. So with our Bank Negara is maintaining the OPR rates and US cutting the rates, hence we should be able to see that the ringgit continue to get strengthened and even go stronger. Okay, after the rate cuts of Feds in the next week. Yeah, by next week. All right. Okay. So what are the things that we can do, and we can even position ahead of next week cut is we might really want to focus on some of the blue chips that might enjoy from forex gains, like from a cheaper USD borrowings or even cheaper raw materials, because we are seeing that a continuous strengthening in ringgit. Okay, so this could be a 6 months play whereby a stronger ringgit that resulting in the month of September, it could be reflected in the year end or even February earnings. Okay, but as the time it goes by, we should see a stronger performance in all these stocks. And if you able to tap on some of the stocks that they also have stronger domestic demands, their business has been improving on local demands, then yeah, the double positive effect, it could drive the stock's price to go even stronger, even higher. Okay, yeah. On the downside wise, we might really want to continue to stay conservative, and also continue to reduce exposure on some of these export reliant sectors, particularly like maybe like furnitures, like glove. These are some of the sectors that might remain weak at the moment. Okay. All right, so that will be the idea for how the Fed's interest rate cuts are gonna that our local monetary policy gonna affects us. Yeah, for and preparing for the month of September. Okay, so for the second half, the later part of September wise, then we might want to look into and get prepared for the budget 2026 that's gonna be announced on October 10th, early October. Okay, so this budget gonna be the first budget under 13 Malaysian plan, 13 MP. Okay, and we will expect that it should be in line with the what has been stated in 13 MP, and also be part of the Madani. Okay, yeah. So some of the key area of of the key pillars that they will be looking at it will be on characterized on the public service delivery and performances through enhancement in the technology like e-government services, all these e-services area. Okay, and also reduce some of continue the efforts to reduce some of this tax leakage, all this to improve and safeguards country nations tax income. Okay, yeah, so that will be one of the key area that this budget will be looking at. Okay, and other than that, it will the raising ceiling is one of the is another pledge that this budget will be looking at it, which is similarly that it mentioned in 13 Malaysian plan, where we want to drive our businesses, our industry into our economy, our country in towards a high income country. Okay, whereby some of these plan like NETR, some of these plans NIMP, it will continue to being pushed and having allocation and also incentive to drive all these industrial transformations. Okay, yeah, and other than that, reforms are another part that we will be seeing in the budget 2026. Okay, we in this year we have been experiencing the reforms in rather than all blanket subsidized. We are seeing that we are changing from all blanket subsidized to targeted subsidized. Okay, so subsidiary is one aspect that the reform will be continue. Okay, whereby we will be expect we can anticipate that more concrete or even further implementations on the on the on the what the petrol subsidiary. Okay, targeted petrol subsidiary. Okay, other than that, we also will see reform in the medical system that has been putting up and talk about, and of course in line with the 13 Malaysian plans, education's reforms on education is something that might be raised up in the budgets next month. Okay, so some of the potential sectors that we might want to that we can't try to position ahead, it will be include some of these sectors like pharmaceutical. Okay, some construction and utilities that will be laid down the groundwork the for the industrial driving the industrial transformations. Okay, and of course technology and e-services, that's which is essential. Okay, and of course with some of the infrastructure work and incentive on the East Malaysia sites, over the East Malaysia sites. Okay, so these are some of the sectors that you can consider to look into and find some of the gems and be prepared ahead of the budget 2026 next month. Okay, so if you do not know which are the counters that could be related, could be potentially benefited from under all these sectors, do feel free to drop us a message, okay, at the end of the section today. You can scan and follow us on our Facebook, or even contact us through our WhatsApp, and we will be sharing more ideas with you guys, okay, on some of these potential sectors. All right, okay. So last but not least, we comes to our last section of the day, which is the seasonality and also the quarterly earnings for the month of September. Okay, so in the month of August, we out of from this continuous growth table over 5 quarters that we had on our equities tracker screening table that available on our platform. Okay, of the 9 counters that reported their earnings in August, 3 of them are performing, and unfortunately 6 of them they are doing worse QOQ. Okay, some of them like MN Holding, they are still performing year on year. Okay, but if we are talking about quarter on quarter, yeah, then they are slightly lower. Okay, for some of these counters. Okay, so out of these 9 counters that reported result in August, we actually have chosen 4 and recommended in our sections during August monthly trader stock. Okay, the first of all is the SCG Berhad, the Southern Cable, actually that have moved more than 20% in the month of August. Okay, and MN Holding is one that's mentioned just now that it was performing year on year, but QOQ wise is lower. Okay, so we can see the share price also reacted and also came down by more than 10%. Okay, yeah. Another one, Percut. Okay, Percut is still trending higher. Okay, QOQ is slightly lower, but year on year wise is still trending upwards. Okay, for their earnings, and the trend wise is also up more than 15% in the month of August. Okay, as the last one that we recommended in our last month section, which is SolarVest. Okay, unfortunately SolarVest after recent rally on the breakout of 1.80 ringgit, the share price decided to took a retracement in the month of August, and it was down more than 10%, while the results for SolarVest is considered as just normal, nothing too surprisingly good. So that's why the share price, the hype kind of like taken off, and it encountered some pullback. Yeah. All right. Okay. But we can see that in August it had quite a strong rally, strong buying during early September, and it's started to rebound. Okay, solar sector remains a little bit remains attractive at the moment with there are so many construction so many RSS5, all these awards has been dished out, and it has been looked as part of the main key components to drive our renewable energy segment. All right, okay. For the month of September wise, we have no recommendations on the quarterly earnings as out of the table. Okay, the table for the earnings growth, that is none of them which is scheduled to release in the month of September. Okay, yeah, so the heavy earnings months August has been concluded, and there is nothing to be recommended for the month of September on the earnings parts. Okay, as for the seasonality, okay, so September, it appears to be it usually is a weaker months, okay, weaker months throughout the year, okay, whereby we can see seasonality wise, most of the index has been underperforming, okay. Similarly, if you look into some of the US indexes, like S&P 500, September is most of the time it is not friendly as well. Okay, so as we are entering the month of September, today is 8th of September, is still early of September. Despite that, the sentiment still supported with potential rate cut next week. Okay, it could be a good opportunity for some of you guys that has been trading actively in the month of August to trim out your position and also take some profits. Okay, and that will give us some bullets to buy lower, as if we really see a seasonality selling and profit taking in the month of September later, maybe during the last week or the second last week of the month of September. Okay, among all, we can see that healthcare continue to remain the worst performer, as it might have the drag in the share price for the past 5 years, as the share price adjusted. Other than that, we can see telcos, utilities, they are not performing really well as well in the month of September. Okay, yeah, so that would be my view of for the month of September, which is take profit, trim your positions, get back some funds, some bullets to position in, and get prepared for the to buy at a lower price, accumulate, do some accumulations for the preparations for the budget 2026, and also or even for a medium term trading after the on the impact of the rate cut. Okay, as mentioned just now. Okay, so if you are interested to know a little bit more on the impact of the OPR, the impact of the rate cuts, all this thing, okay, we have Mandarin sections on talking about the OPR, talking about the interest rate cut, the monetary policy changes, and how it gonna affect the bank's movement, all this thing, on 18th of September, okay, in Mandarin, 8 p.m. on our YouTube channel. Okay, do feel free to go to our website or even our Facebook to register for it. And also another sections on another Mandarin sections about how to discover and also explore some of the features that we have on our Pack Online platform. Like for example, the equities trackers screening functions, the screening list. It actually has 4 screening lists that help you to screen out some of the high dividend counters, some of the explosive earnings counters, consistently profitable counters. So some of the screening method and also screening mechanism can be shared, will be shared during our sections here, okay, on 23rd of September. Okay, so that will be the end of our section for today. So like I said, if you have any questions, or if you want to know a little bit more about how to position it ahead of the budgets, or some of the potential counter stocks to look into, okay, do feel free to WhatsApp us at this number, or even scan out the QR code to follow us to get our updates more frequently. Okay, so if there's any interesting updates that we can share publicly, then we will share it on all these social media as well. All right, okay. Otherwise, that will be at the end of our section today. And thank you for joining our section today, and have a good day. Enjoy your September. Bye bye.